In a recent short, I was talking about how you can use a high yield savings account to stash away some money to pay your bills out of that. And then while you're paying your bills, that high yield savings account is going to make you a little bit of money on the side. So I figured I should go into more detail for anybody who's curious of like how to approach maybe, let's say, getting to that point within maybe 6 months or 9 months in a year. So you've taken your first month of just adding up all of your bills, one by one, your gas, your electric, your heating. So you've added up all your bills. And then if your goal is to get there within 6 months, you would take that total and divide it by 6 months. If you look at that number and you go, yeah, I could put that aside in a high yield savings account, now you just added yourself an extra bill that you only have to pay for 6 months. And then after that 6 months is up and your high yield savings account is built up to the amount that you typically pay in bills, now you just switch over to, you stop paying that amount you've been paying, or really, if you've been able to pay it and it's not been, a huge life setback, keep paying it as a way to build up what's called a nest egg, because the bigger you put that high yield savings account, the more money they're going to pay you. For my current rate, it's like $275. They pay me $1. So if you multiply that by 10, if somehow you can save up to almost $3,000, $2,750, the bank's just going to drop $10 right into your bank account at the end of each billing cycle. Just plop, right there it is. No questions asked. Now, I think technically you have to claim it, because Uncle Sam wants their cut of anything, but you can deal with that. In a way, it was free money anyway, so you only pay the taxes on the $10. Build up your high yield savings account, and now you've created that middle ground, that middle layer of, you make sort of one payment or out of each of your paychecks if you're paid bi-weekly. The one caveat with high yield savings account is you're only allowed so many transactions. So what I really do, and I am going to rep the bank that I use, not sponsored at all, it's Ally. So Ally, you create like a twofold thing. You drop your high yield savings account and your checking account. So the checking account, you can pass money between that a lot easier. There's no what's called an ACH, automated clearinghouse. Usually takes like 2 to 3 business days. They don't have to do that because it's all under their roof. And there's other banks that offer high yield savings accounts. So whichever one you feel most comfortable with. You've built up your money. So now when you need to pay your bills, you just move that lump sum over to the checking account. Then from the checking account is technically where you're paying your bills out. Maybe when you've added everything up and you divide it by 6 and even that number's too big, well, okay, let's divide that by 9. That'll get you there in 9 months. If that number's still too big, you can divide it by 12. That's now 12 months. So I think for me, my household here, we do, I don't know, I'm going to, between mortgage and everything, let's call it, I'm going to make the numbers easier on myself here a little bit, $3,600. If I were to divide that by 6, that's another $600 a month. He's like, no, I'm not scrounging that together. If I were to divide it by 18, so a year and a half, that'd be $200 a month. Okay, $200 a month. That's something that you get tighten the belt a little bit. You look at it, it's like $50 a week. You usually can find ways to tighten the belt to scrounge up like $200 a month. Hopefully, your monthly bills are not $3,600, and if they are, well, I mean, there might be other tips than just, here's a way to make $10 on your $3,000 a month. So that's just an example there of how to walk through, just keep dividing it until you get to a number that you're like, yes, I can find a way to essentially pay yourself. And again, you're only having to do that for the 6 months, 9 months, 12 months, 18 months, whatever it needs to be. However, whatever number you have to divide by to be the number of months you're going to do it in. You only do it for that many months. Now, I do recommend if you've already worked it into your typical monthly bills structure, then you're better off just still dropping that into the account and building up, like I said, what's called a nest egg or an emergency fund. Some of the financial planners and stuff, they recommend and encourage, I want to say it's 3 months or even 6 months worth of bills stashed away in a savings account. That way you can just real quick and easy pull from it, because, God forbid you lose your job or some kind of disaster hits, that you wreck the car or the house catches fire, just all of these various, what's called a force majeure in legal terms, an act of God, disaster hits you, and instead of having to take out a loan or put on a credit card, it's nice to be able to have those cash funds ready to go if need be. But baby steps here. So the first step is, like I said, having that bill pay saved up in a high yield savings account. You can park it that way. The bank's going to pay you, and now you know exactly where the money's coming from to pay next month's bills. So it's kind of two-layer. You're able to start saving up some money, and you are relieving some of the worry and anxiety and stress that we've all faced, where you go, oh my goodness, how do I pay next month's bills? What am I going to do? Like, am I going to have the funds to pay all this stuff? You're still making the same payments, but you're paying it to yourself to then be able to pay out of that to pay the bill collector. Again, so stash it in a high yield savings account, have a checking account that's in the same with the same company as the high yield savings account. So pay your bills in the high yield savings account, move from the high yield savings account to the checking account, and then with that new checking account, pay the bills.